How's it going? How's it going, everybody? We are about to get into some really good stuff, covering the Forex basics. So, to make it clear for what we're going over, let me just have it right here, right? Support and resistance, trend lines. Then we got the higher lows. Actually, let's keep it like that. Higher highs, higher lows, lower highs. Boom. Then we got the third one. That's break and retest. Definitely love me some break and retest. So let's get it. So I'm actually using the euro versus the Australian dollar. I do have a love and hate relationship with this pair. I used to trade it a lot. I made a lot of money with it until one day, I don't know what happened. It turned its back against me and I lost some guap. But it's all good because we made it back, right? So to get right into it, when I do these markups, I actually do them on the daily time frame, and then I go from there all the way down just so that I can see what's been happening from like, because each candle represents the time frame that you're on. So whatever candles you're seeing, whatever time frame you're on, that's how long it took that candle to be formed. So let's say that last candle that's formed, it took one day for that to form. So when I have it on a daily screen, that's just me trying to see it for the past couple months, what's been happening. As you can see, it goes all the way back to December. So that helps a lot with understanding what it's going to do next just for that specific time frame. But I love to trade with the trend. Not saying that indicators don't work, but it's just like I do use indicators and stuff, but it's just my personal preference is trading with the trend, understanding what the zones are doing, because the market really moves in patterns. It just repeats itself. So if you can understand what the patterns are doing, you'll be able to understand what's going to happen next within the market, and you'll be able to get in and out with the bag. And this strategy, this if you call it a strategy, I don't know, but it's actually just a way of marking up charts. It's pretty simple, it's basics, and it's beginner friendly. And it I was about to say something really important. I completely forgot. Total brain fart, but it's all good. Yeah, like I was saying, not saying that indicators don't work, but for me, I just prefer understanding the zones and all that good stuff. So coming from the daily time frame, so what I do is I look for the support and resistance on there, and I use I use the horizontal line, right? So people have a very hard time marking support and resistance, and it's pretty simple. All you have to do is put the trend line where it bounces off more than 3 times. For me, I do more than 3 times. There's people that would put their line at the very bottom here, but why would you do that when it's not really like it didn't bounce off that area more than once, right? And for you to have a better understanding what it's gonna do, you'd rather have at least 3 touches. So I'd have my resistance right here. Actually, I wouldn't even use the lines. I would actually use the rectangles simply because I don't know, it just makes more sense for me. And we can actually write that in, right? So that'll be resistance. I won't write all of them in, but I just want to make sure it's pretty right. So we got resistance right here. Then we got the support. I put my support down here, probably a little lower, right? Taking this area, basically trying to get that. People would ask, okay, why do you do it like small sometimes or big or whatever? It really doesn't matter. It's just my personal preference. If you want to do it thinner, you can do it. If you want to just use the lines, you can do it. But this, I don't know, it just makes more sense for me because I'm able to see the candles bouncing inside of the rectangle. So it kind of like, makes sense for me. So here we have for the resistance, we have at least 3 touches, right? That's your ceiling. That's the highest that it went. What I mean by that is I'm really looking at this little area here, right? I'm really looking at this section here. I'm not looking at what's going on in the past, like over there in that area. I'm really focused on here. That's what I'm getting my support and resistance from. So to continue on with that, right? And what I do also while I'm on there, I would put my trend line right down here, right? So what that does is it actually helps you with understanding, like if the candles break above, because that's part of the confirmations as well. I've made some good bread like just using these trend lines. People don't understand, like trading is not complicated at all. You just got to keep it super simple. Whatever makes you money, you just stick to that, and that's what makes me money, so I've stuck to it, right? So what I use the trend line as well, whenever I have 3 touches, I already know on the 4th touch, it's probably going to go above. And if it goes above, then I know for sure I can enter and buy, right? So we're still on a daily time frame, right? Once I do that, then I go down on the 4-hour. So we can see on the 4-hour. So here's what's happening here, right? On the daily time frame, we're seeing that the market is going on a downtrend, right? It created a new low, right? It has it's creating a new low, and as you can see from here, from this last area right here, it's actually been on an uptrend, right? So you might be looking at it and say, okay, it looks like it's going down, but it actually it's turning the other way. So when we go down on the 4-hour, you can see much better how it creates. This is the lowest for that area, right? Change the color. Green. No, not this color. Let's do yellow. All right. I don't like it. Let's do, okay, purple. That's perfect. All right. So that's the lowest that it went. Actually, it went lower than that, right? Actually, it came here before it switched directions. The moment that you start seeing that it's creating a new low, that's telling you that the market is going on a different direction. So if it was going down, it actually is going up, depending on the time frame that you're on. Because there's people that sits and mark up their charts on one time frame, and then they place their trades that way, and then they lose money and they don't understand why. It's important, because you might be on a daily time frame and it looks like it's going down, but when you're on a 4-hour, it looks like it's going up, and then 1 hour is doing something else. So that's why it's important for you to look at different time frames so that you can find your interest. Especially if you're trading binary, you never want to be on a 4-hour time frame. If you're trading binary options, you're making money in minutes, not hours, right? So you'd be on 5 minutes or lower. But if you're trading regular Forex, you can definitely hop on. If you're trading long term, if you're swing trading, you get on a higher time frame and you find your entry that way. But if you're doing you're scalping or anything like that, you mark up on 1 hour 15, you enter your trades. Some people enter their trades on 5 minutes. I used to enter my trades on 5 minutes, but then I got more into the swinging side, so I'd mark up on 4-hour and hold my trades for a few days. So back to it, guys. As you can see, actually let me mark this right here. So this is the lower low, right? So we got a lower low right here, right on top of it. Then this becomes the higher low, right? So anything above that is the higher low. So up, creating a new high, right? So we got this lower low, and then we got this higher low, and then we got a higher low up here as well, right? And this is the highest that it went for the time being, right? Because the market did open into Sunday. However, we are not placing any trades because we don't trade on weekends, but we're checking out the charts to see what's happening, because I like to do my markups before at the beginning of the week, because I do swing trade. So I hold it, I do the markup and hold it for a few days within the week and whatnot. So that's how I get my entries pretty well, right? So as that continues, when you go on a smaller time frame, you'll notice that the zones change, right? So that I learned from one of the educators with the platform that I'm using, that the 4-hour time frame is usually really similar to the 1 hour, right? But it's just smaller. So once we come here, right, you can still see that the market has been on an uptrend, right? And it's still creating new highs, right? This was the lowest that it went for that area, and then it continued to go up. It actually came this one came lower than it should, but the other ones actually went higher, right? Then we got this area here, and then we got this one right there, right? Higher high. So in this instance, what you would expect for you to find your entry. So now let's go on a 15-minute time frame. This is where we're gonna also get in there and look for our support and resistance in here. And then I'm actually gonna use the line here, right? Boom. And then we have, boom. Let's zoom out a little bit. Depending on what you're trading, that would determine, depending on what platform. If you're trading binary options, you would definitely try to find your entry on a lower time frame. But for me, I usually would do it on a 15-minute time frame for scalps. But for swinging, not a lot of people swing, simply because not many people understand the concept of doing that. You know, some people would be scalping and then they actually place their trades on a bigger time frame, and then they wonder why their trades take so long to hit. And that's simply because, why are you trading on 4 hour? If you enter on a, let's say we're on this 4-hour time frame here, right? And we decide to enter, our trade is not gonna do what we want until like maybe a few days later, because each of those candles take 4 hours. And if you're looking to place to be in profit and hit your take profit within the next hours, definitely not going to happen, right? So as we can see here on a daily time frame, the market was actually, it looks like it's on a downtrend, right? And then we got down to the 4-hour, and here's where your confirmation would come in, right? This is the area for me. This is the area where I'd wait for, if I'm trading, if I'm swinging, this is where I'd wait for my entry, right? Because it's obvious here that the market has been going up. And even if it goes high, right, from this area and comes here, and then it pulls back down, it still shot up above, right? It still shot up above my resistance, and it creates a new resistance. And that's good enough for me. How much, let me see how many pips that would be. It's like, yeah, 260 something pips, right? That's hell of a lot, depending on your lot size. It really doesn't matter about your lot size, honestly. It's about the pips that you can catch for people that's trading regular Forex. But the ones that are trading binary options, you would really do the same things, except you're doing it on a smaller time frame, right? Because now me marking up the higher lows, lower lows, higher high, and all that stuff, I'm already understanding like what position I would be in, because people will be confused like, okay, well, how do you enter a trade? You enter a trade from confirmations, and if you don't have indicators, you use the trend lines, you use the zones, the patterns that the market has made. And we can see here, guys, look, there is a pattern that's been happening. Every time it goes a bit high, it touches the resistance, it actually pulls right back, right? And it's telling you what's going to happen. So me, when I'm doing this, what I do is I put my vertical line according to what the pattern has already done, right? And then I catch that drop, which would be from here to there, right? And that's like, yeah, 200 something pips. That's on a daily time frame too, right? So let's go on a smaller time frame and get right back in there. 1 hour. And here's what the market always do, right? It always breaks and then it retests. And people tend to lose money when it retests, because sometimes when it retests, it goes lower than the previous move that it did, right? It would go lower, and that's why it would hit your stop loss and stops you out of the trade. That's why we enter after the break, right? So I'm gonna give you an example of the break here. Let's actually go on a 15-minute time frame, right? So while we're in here, after understanding, okay, what the market has done, understand marking up from a bigger time frame gives you a bigger scale of like what is going to happen next, right? We've already seen that the market is about to break above. This black line right here. Actually, let me make it a bit bigger. Change the color. That's the trend line from the 4-hour. No, from the daily. That's the trend line from the daily. So you know for sure if it goes above that, we're definitely in to just continue to buy, right? So when we're in here, we're on a 15-minute time frame. So this is the last candle that's forming, and it has about less than 6 minutes until it's done forming. So me coming in here looking for an entry to trade, right? I marked my zones, right? And this whole area right here is basically in consolidation, which means the market is not making much moves. So if you were trading binary options, this is where you would be able to take some profits in here, right? Just using the zones, just understanding what the market has done. Soon as it, notice here, right? Soon as it broke, it retested, right? This is a retest. This is a retest, right? Every time it does it, this is a retest. And here's the zones that it would break, right? Boom. It kind of retests in the same area, doesn't it? Trying to make it much more clear. And then we got this one. Right, boom. It kind of retests in the same area. So you're trading binary options. Once you see the candles actually break above this area here, and then this would be the candle that should enter, right? Because it broke and then it retested, consolidated a little bit, and then it broke back above, and then it continued to shoot above, and then it consolidated. The moment that you see the market starts to like do this right here, the wicking, all of that, you already know, okay, it's slowing down. It's probably gonna go the other way, right? Some people don't know that. They think, oh, it's just gonna keep going up. Nah, right? You're not. We're in here to buy low, and we're here to sell high, right? And the same concept goes for binary or Forex, or even if you're doing stocks, it's the same concept. You buy low and you sell high, right? So once it's doing this move right here, you would just leave it alone, and then it broke below here, right? Broke below here, and then it retested. It dropped, took a big drop, and then it pulled back. It retested, and then it continued to drop back down, right? And it's just repeating itself over and over. And when you're trading, you don't want to be marking up so many different charts. You just want to find a pair that works for you and you stick to it. You don't have to be doing all types of different pairs and confusing yourself. And it's all about having patience as well, because you don't want to get in there and then you make your move way too early and you end up losing a whole bunch of money. That's what happens to a lot of people, right? And they don't even get it. But now that we are on the 5-minute time frame, we would basically do the same thing again. Put up our trend line, which gonna make this black, right? So having this trend line right here, here's what I would expect it to happen. So like we said, this is resistance, boom, and then we got support here, right? It could be higher depending on how you trade, but I put it there just so that we can understand what the pattern is doing. So notice what happens here, right? With this trend line, this black arrow that we put here, the candles are dropping below. That's telling us, okay, shoot, we're about to be selling in here, right? And that itself is one of the confirmations that I use when I'm entering a trade, whether it's buy or sell. But I mostly use it on the sell, simply because the pair I would be trading would skyrocket a lot, and then as it pulls back, as it's pulling back, it actually takes major drops. So that helps. It's pretty clear, right? Once you have at least 4 touches, let's see how many touches we got here. Right, 3 touches. Hold on, I think I might need to bring it a little closer. Right, this is a touch here, touch here, touch here, right, including this in there, as it pulled back to that zone, and then on the 4th one it drops. Right, let me see if I can show you guys that same thing. This is 5 minutes. That's if you're doing binary options, you just go right in there and take your sales. We're gonna come back to it and see what it did. Since the market is open, we're able to check out what actually, let's go on to 1 minute and see the move that it's making. Boom, right? I love to go down to the 1 minute because I'm able to use the same method that I've used on the bigger time frames. I still use it on the small time frame as well to find my entries. So you can see that break and then that pullback, right? That break and retest, and then it dropped back, right? So the market tends to do that a lot, right? As soon as it does this break, pulls back and it drops, just like this right here was actually a retest here. Right, this pullback here. So when that happens, you just prepare yourself to enter back. But what I do is I don't just drop right back in. I wait for a good entry and then I continue to go in. So it seems like it's gonna keep dropping. Big drops, that would be some good clears, and we're on a 5-minute time frame. So if you're on a 1 minute or 2 minutes or 3 minutes trading, you would definitely clear some sells in there. But that's some big drops, right? So let's go back to the 15-minute time frame and see what's going on. It's pretty clear. So let's say it keeps dropping and then it breaks below the support, then we know for sure that we're gonna enter and keep selling as well. Notice one thing that happens in the market whenever it does these big moves, it starts to slow down, and that's your confirmation to just like start backing off, because people don't know how to back off, right? They get excited, the adrenaline rush just like gets them so like, I don't know, tingly inside, and just like, oh my gosh, I'm gonna triple my account today, and then next thing you know, you get in there a little too late. Like how I trade, if I miss the entry, I'm good. Like I'm not even gonna force it. Like if I wanted to enter a high sell and I actually miss it, I'm good. So this zone right here, if you're trading regular Forex, I wouldn't even enter here because this is out of the zones. This is consolidation period, right? When you're trading binary, you can trade in consolidation. The consolidation that's at a bigger time frame may not be a consolidation period for, you know, a 5 minute or a 1 minute, but they still consolidate as well. Like here's an example of a consolidation in a 1 minute. This, let me change the color though. This is a consolidation area on a 1 minute, right? So it still consolidates no matter what time frame you're on. But the bigger you go, the more you're able to see, right? So back on the 15-minute, we're expecting this to actually let's see if these candles actually drop below you know, at the support. Now we're expecting the market to actually potentially continue to go down, right? Because it goes below support. But if it gets to a certain area where it just stays and consolidates, and then it goes back up and it goes above resistance and goes above that green line that we had from the daily time frame, then we know now the market is on an uptrend and it's going for a buy. Well, we already know it's on an uptrend, right? Zooming out, going on that 1 hour time frame, we already know that it's on an uptrend because it's still at that newest high that it created, right? The moment that it goes above the last high, you already know it's going to keep going up, right? And new highs just means more potential buys, right? Create a new high, and we're expecting that pullback so we can get in there with a buy, right? So we got this drop happening, and sometimes it does the same moves that it would have, that it's done before. Like let's see here, right? This here, right? Sometimes it does exactly what it's already done. We don't know for sure that this would continue to drop, and we just can try to predict that it will do that, right? But you having your strategy and whatnot, what works for you, then that would give you confirmation whether to buy or sell, depending on what you use. But everybody's different, right? So we're able to understand the support and resistance, and people complicate it for no good reason. It's really not that difficult. When you're marking your support and resistance, all you do is look for at least 3 touches, right, where the market bounced off more than 3 times. Some people would do more than twice, but for me, I do more than 3 times, right? So this right here is a pullback. is a retest. This was a break, and then it retested back, and then it continued to drop. This is on a 1 hour time frame, right? But it didn't go back to the same to the zone that it broke away from, right? This is the zone that it broke away from. It just dropped, and then it actually pulled back at another area, right? And then it continued to drop, and then it consolidated a little bit here, and then it did its drop. So how would you know whether it would continue to go up in this area or not? You look for the lower lows that it creates, right? The moment that it creates this new low, and then it drops and it create a new low, lows are telling you, okay, the market is on a sell, right? It's on a downtrend. So you're using these lows as indications for you to know whether to enter or not to enter for a sell. But the moment that it does this move here, right? You see how it bounced off this area 3 times, and then it started to go back up as once we marked up this little area down here. I know it's a lot of boxes and squares, but the purple boxes, right, with the yellow outline, it started to create new highs. So the moment you see it starts to create new highs, and once you put your arrow there, it doesn't matter. The moment that it just stays above the arrow, you're on. You just keep buying, right? So look at this big drop that actually happened. Let's go. Right, I think I took it off by accident. Let me put it back in. Right here. Right, this huge drop that happened. So if you were selling doing binary, you definitely would have cleared your trades, and pretty successful. A lot of people don't know that the using the trading view to do your markups is so much better than to just use the chart that the broker gives you, simply because it gives you so many more options, so many more things that you can do when you're in here, right? All these things that you're able to do on here, you're not able to do with the broker most of the time, and it's just better, right? It's just better if you want more success, because people would give me a headache about using TradingView, and I'm just like, yo, it's really not a big deal. Just use it. Just use it. If you want to do better, just use it, because it's much more clear, and it's for me, it's so much better, right? And it tells you you got on the right side here, right? We're on a 5-minute time frame, so this candle that's forming here, it's got 2 minutes left, and it's actually it's bullish, right? It's green, so the market is slowing down here a little bit, and we're expecting a little bit of a little consolidation, something small. But if it doesn't happen here, it's bound to happen, and then if it goes below it, it's gonna keep dropping. But whenever there's this big move that happens that goes through the arrow, it just drops. And same way goes for let's say if you were looking to buy, right? But hope that's making sense, right? What I do is, it might look a lot, but it's really not, because once you mark up, you understand more. You're able to see what the market is doing much better, because it's just so much simple. Look, so much more simple. Let me show you guys, right? So it did this, then it dropped here, right? Downtrend, then it went up, then it dropped, now it's going up, right? Boom. And that itself is called a, let's see, boom. So the moment it broke down from this, like, let's go back to the 4 hour and see, right? This area right here, this happened back in November, so that was a while back, right? We're not trying to see what happened in November in order to understand what's going to happen now. But when you zoom out and you're looking to understand, like, okay, well, what has this pair done before? That's why it's important for you to just take one pair and master it. And once you've been able to do that, then you can understand it like it's the back of your hands, like it's your pair. Like there's so many traders, professional traders that are super successful because they they only trade like one pair or two pairs. They don't be trading all the, if you're still trading a whole bunch of different pairs and expecting to see some really good results, you're fooling yourself, because that's just a recipe for disaster. Like, how can you just be a jack of all trades and a master of none? Right? Just take one. Having so many different pairs doesn't make you a better trader, right? It really doesn't. It just makes you more confused, because now you're trading something today and then tomorrow you're trading something else, and then you're not really like full in with just one. So you keep one pair. All to say is take one pair, master it, understand it, and just look at it. How, this is what I do, right? If I'm trading binary, I'll do the markup for the like long term, like on a 4 hour or something like that, and that basically gives me like for a few days, I already know what I'm going to be looking to do with this pair. I already know if I'm going to be looking to buy or to sell or whatever it is, right? Because I understand what it's done long term. So now short term, I'm able to understand, okay, well, this is what it already did. I'm not going to try to keep selling if it's not going down. I'm expecting to actually buy, right? And it doesn't have to be complicated. It's pretty simple. So this is what I actually started with when I first started trading. I used to just put all these different arrows, try to understand, okay, uptrend, downtrend, higher low, new lower low, higher high, lower high, all of that stuff, lower low. All of that stuff made it much simpler for me. Like I used to come from the daily, mark that up, and then go on a 1 hour, mark that up, and then catch it on the 15 minutes and enter, right? But if you're trading long term, like a swing, this purple, let me change it actually. This little blue area right here, that's where you would wait to get your entry, so that you can understand once it goes above that green line, that's one confirmation, and then it goes above resistance, that's a second confirmation, right? And then it touched this black vertical line right here, right? Notice what happens every time it touches, right? The every time it goes high above a certain area, it actually starts to go down, right? So once it does that, you enter and you get your stuff, and then wait for it to pull back down. And while it's doing that pullback, there's people that tries to make money both ways. Like once it shoots up, like if I'm trading and I'm trying to find a buy, I'm not gonna try to catch a quick sell. That's how you lose money, right? Just go in, look for a buy, and get out. Don't try to, okay, I can get a quick sell here and there. Nah. So I really don't trade while the market is pulling back. I just wait for it to finish happening, and once it touched back, that same zone that it broke away from, then I find a new entry point. But I don't find my entry right at the same area, simply because there's a lot of fake outs that happen in the market, and you don't want to involve yourself in that, because there's times where it pulls back and it actually pulls all the way back within that consolidation period, right? And then it makes its way back up. So what I do is I wait for the candle to actually close above, right? Ain't nothing wrong with waiting. People don't got patience. Well, you ready to lose money then. But there's really nothing wrong with waiting. So I would wait for it to close above, then I'll enter and get my coins in. But just a lot of trapping, a lot of stuff that, let's say we would go on a 15 minutes. It'll look like it's going on a downtrend, right? Right, boom. But on the hour, it's actually going up, because this low is higher than this low right here, and this low here, right? Check this out. Got this double bottom here, right? So we got this low. Notice every time it creates the lower low, you're looking to see the next move that it does, where did it stop? It takes really big drops, right? So that's what we got on that 4 hour. And then on a 1 hour, oh shoot, look at this setup. Look at this little markup that I did. I said it would break and then retest and then jump back up. It did it, but not in the same area that I said it would, right? It did it here, but I marked it up to do it there. You know what I'm saying? But yeah, so that's basically it's good to, you know, just do that and see where if it does what you want it to do, because it feels good when you go back and you're like, oh shoot, it did exactly what I projected. You know what I'm saying? So it's good to just use the arrows and all that stuff and just mark it up and let it do its thing. Right, so we are on a 1 hour time frame. What I do is I definitely look for right, the highest and lowest. Right, it gets tricky a little bit. Right, for me, oh shoot, these things be playing with me sometimes. Right, highest and lowest, even when you zoom right in. Ooh, let's not do that. Right, let's say we would go on a 15 minutes. It'll look like it's going on a downtrend, right? Right, boom. But on the hour, it's actually going up because this low is higher than this low right here and this low here. Right, check this out. Got this double bottom here, right? So we got this low. Notice every time it creates the lower, it jumped up and then it did a little pullback here, right? Did a retest on the 15 and then it went back up, right? So when that happens, we just if you're in a trade, well, it depends if you're trading binary or just regular forex, but if you're in and you once it jumps above and you move your stop loss, it from this pullback here, it would hit your stop loss, like if you moved it, right? So let's say we are going long, right, and we decide we're going to jump in once it breaks above, right, and we're going to try to catch it went high, but let's just keep it at 200, whatever, 206. So me personally, this is where I would get my entry, right? Once it goes above and it breaks above, right? And let's say as soon as it broke above this little area here, you're in deep profits, right? You're in profits, and the market is actually 50 pips above, well, a bit lower than that, roughly 40 or 50 pips above your entry, and then you decide, okay, boom, I'm about to move my stop. Sometimes it's good to just move it to break even, right? Break even, move it to your stop instead of like right above your stop, because sometimes, well, yeah, the brokers understand, they know where your stop loss is, yeah, but what I learned to do is I would monitor my trades while it's doing the pullback, right? So I'm watching my trades and keeping my stop loss as is while it's doing the pullback, and then once it breaks above the retest zone, then I move my stop, right? So I would move my stop, and this would be like my new stop loss or whatever, right above the pullback, right? And then just let it ride, let it keep going up. So either way, even if it comes back to that zone, I'm still getting out with like 60 pips, 60, 70 pips in profit, whatever, right? So that's what I do. But yeah, without indicators, you can really just rob the banks. Whether it's trading binary or regular Forex, you can still do this. Just mark your support resistance, use your trend lines, and then check your higher lows and the lower lows and all that good stuff. And then there you have it. But let's check up to see what happened in that last. Which pair was it? Euro odd, or was it? What was it? Oh yeah, I think this. Right, I think the pullback's happening. Look at that. Look at that. Right. Stopped in this area, it's pulled back. Right. We're gonna expect that once it does this, it actually like drops back down. But if it goes above that arrow and comes above here, forget that sell. Now we're looking to buy. Right. Forget that sell. Now we're looking to buy. Boom, boom, boom. And that's basically it. Hopefully something made sense. Definitely love my trend trades and all that good stuff. It makes a lot of sense for me. It's helped me clear a lot of trades and take a lot of profits. You know, there's no such thing as a strategy that's better than the other. Everybody's learning is differently, and everybody understand things different. So can't just say, oh, that strategy is better. Nah, if it works for you, then it's better for you. But there's no way that's better. Oh, trading with no indicators is better, or trading with indicators is better. Nah, it's just whatever works for you. That's what's better. That's what's better for you, right? I try to make that clear to people because they'd be like, well, what's the best strategy? There is no best strategy. That's what's for you, that's what's best. Stick to it. Don't get it complicated. Just because you're somebody winning with a different strategy and they're making money and it's making sense to them, that's them, right? They found something that works and they stuck to it. You just gotta find something that works and you just stick to it, and that's really that. I mean, it's really not as hard as it sounds, but about it.